Everybody, this is John. Welcome to the free video. And really, so this is FXY. This is the yen, the ETF for the yen. And this is really the only chart that matters right now in terms of trading stocks. As long as this is bid and going higher, then stocks are going to be under pressure, period, end. Okay, so let's look at the Qs. And we can see at this point, they've been pushing lower. Now, tomorrow is monthly options expiration, and we've got two clear battles going on a daily chart, and this daily chart doesn't quite capture it. Let me get rid of this. I was doing a comparison with the spiders earlier, and we've got two battles going on here. So of course this part on the daily chart just kind of zooms in this right here, but within the context of what we're doing, like on a weekly chart, everything's normal, everything's fine, okay? So, you know, we're coming back, we can go down to about 95. We're currently at 99.65 and we're fine, okay? And that's way down here. So think of it as the weekly trend is like that. And we can conceivably keep going like this until we get to the point where we're logically and methodically testing this uptrend line. I actually think we're going to, and I think this is going to be kind of where the rubber meets the road, so to speak. Okay. Now, a couple things going on here. First, if you guys didn't know, the Swiss franc today, they announced that they're kind of unpegging from the euro. They're not going to maintain that same relationship with the euro that they had pegged it to earlier. And that's a big deal because what happens is that's going to create a lot of havoc and a lot of margin calls in other markets, okay? And that means that people are going to have to sell stuff to change this, and that can put downward pressure on stocks. But it also means that money's flowing into gold, okay? And we've seen that happening, and that's something despite the fact that there's a strong dollar. So this is a long way of saying that even though that fighting, getting aggressively short has been kind of the same idea of kind of hitting a hammer against, taking a hammer and pounding it into your forehead. It can be fun for a couple of days, and then it's like whoosh, right? And so it's just this another area where this is going to happen. Well, one of the questions I always come up with is, what are people thinking? What is their mindset like during that time? So part of what I'm looking at here is the put-call ratio, because the put-call ratio tells us people's minds, okay? Here, everybody's panicking, and they're getting bearish, so they load up on puts, and they get destroyed. Here, everybody's panicking. They're getting bearish. They load up on puts. They get destroyed, okay? Here, everybody's panicking. They're getting bearish. Load up on puts. Bam. I mean, this cycle is repeated over and over and over, with the extreme, of course, being right here, right? So right here, extreme, I'm panicking. What about right here? Oh my God, I'm panicking. What are people doing right now? They are not panicking. They are assuming that this will hold and will rally. And this to me is probably the biggest factor of where I think the bulls are in trouble. I think we could actually get a pretty decent flush out of this. Now, within the context of, to be realistic here, if we're looking at this in the context of a weekly chart, okay, and that's the thing. We don't want to fight the weekly chart, but we don't want to sit there and just hold on for some nastiness without any protection and stuff like that. So there's a couple things here in the weekly chart. First of all, okay, well, hold on here. So to put this in perspective, here's a monthly chart. We have had a good run here, right? It's been going up, 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 and now we're having a little bit of a pullback. So not too big of a deal. The question becomes, because it's going to happen at some point, is, if we kind of go through this and then break through this, that's a big deal. That's kind of the end game. I don't think that's going to happen. At this point, strong dollar and different things like that, that's kind of supporting stocks through normal corrections and things like that. But we also want to keep in mind is kind of where that level is. And we don't know exactly where it's going to hit. I don't think it's going to, if it's going to go kind of ebb back and forth, where's it going to come into contact? Maybe here, maybe a little lower. But either way, we can kind of look at this and say, all right, what's this level? So like 1940. That's not a huge decline from that level, right? But it's still a decline. And if we're sitting there blindly holding on to longs, it's going to hurt. So long story short, what I'm noticing here is that we've got a situation where stocks are coming down and people are complacent, meaning that, oh, this is going to hold and we're going to make new highs, which typically means we're going to at least come in and challenge and maybe get down to 1900 and challenge this. And then if at this point people are complacent and the put call is low, then we're going to get destroyed. I think this is going to continue to hold, but I am not bullish here in the short term. All right. Hope it helps. You guys have a great night, and we'll see you at the next update.